Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Brianna McGurran. She's a personal finance expert over at NerdWallet. And my question to you, Brianna, is I'm sure this is a hot topic that you guys are seeing over at NerdWallet. College grads, they have a number of challenges facing them. Student loans, obviously finding a job. That's another big one, but also saving for the long term. Do you think the class of 2018 has a head start, or is it really that daunting of a task?
It's not all doom and gloom, I promise. The class of 2018 does have a head start. They have time on their side. They can start budgeting really diligently now and meet all the goals that they want to. Our survey found that the class of 2018 can expect to retire at age 72 if they save 6% of their salary and use an employer match if they have one in their 401k, and that they can buy a house at age 36. But you can save more for retirement and retire sooner. You can put less down on a house and get one earlier than 36. So it's really about starting from the beginning with really good habits, and you'll be able to get there.
Do you think college grads are concerned about, nearly half of college grads come out with student loan debt. How confident are they in terms of being able to pay that off? And what's the expected time frame?
Well, about 39% of the people we surveyed who had student loans said that they probably won't be able to pay it off in 10 years. And that is the average time that the federal government offers students when they graduate to pay off their loans. But there are a ton of different ways you can take longer to pay them off. Actually, if you consolidate your debt through the government, you can have up to 30 years. If you use an income-driven plan, they're called, you can save, or you can pay for 20 or 25 years. You're not stuck with that 10-year timeline, which is good because a lot of people said that they're just not confident that they can pay it off in that time.
Let's talk about the 50-30-20 budget. What is that, and how do you apply it to reach those long-term goals?
Yeah, so it's a budgeting guideline where you spend 50% of your after-tax income on necessities like rent and groceries, 30% or less on things you want like concert tickets, 20% or more on savings and debt repayment beyond the minimum that you're required to pay each month. So when you're using a guideline like that, you're working towards all these goals at once. You can save for a home in that 20% bucket. You can save for retirement within that bucket too. So at least you know that you're spending money on things you want and that you need, but you're also saving at the same time.
I like it. It feels like it's very goal-driven.
Yeah.
And that's what makes it really exciting. So where can the class of 2018 and all of us go to learn more about managing finances?
NerdWallet has a ton of great tools and resources. We have a mobile app. We have a calculator on our site where you can put in your income and get that 50-30-20 breakdown for yourself. So go on NerdWallet, get all the resources you could ever want.
All right. Well, thank you very much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.